Okay, here we go. Stock market technical analysis. I'm going to get right into the charts, point out what's interesting, what I'm seeing, and hopefully we find some good trade setups. Give me a thumbs up if you guys are finding value. Again, if you've been with me for a while, you know I'm primarily pretty bearish the markets. Obviously, that I've been wrong for a little while, but again, you know, you're wrong until you're right, and that's kind of how the markets always work. So here we go into the charts. DXY, this is what I'm really watching for, and this is going to be potentially bearish for the markets. This is the dollar. The dollar is starting to break out, and what I want to point out here is the entire rally for this entire rally since the COVID lows of March has been based on a falling dollar. It has not been based on, economic strength. The economy has not been strong. GDP has not been good. There's massive unemployment, and there is, earnings. Corporate earnings are actually going negative. They're actually falling. So the rally has been based on a falling dollar. The dollar, because the Fed is pumping money, the dollar's lost roughly 13% of value. And that's why commodities have been doing well, gold's been doing well, Bitcoin, anything priced in dollars essentially. Stocks do well in inflation as well. But anything that's not the dollar has been doing very well. Take a look at commodity charts such as corn. We can look at that, and you'll see that they've all been, kind of breaking out. Lumber's up 40, 50%. I mean, everything, soybeans are just ripping to the upside. Okay, so understand that the rally has been based on a falling dollar. I think that's important to understand. At least that's what the market's telling me. That's my interpretation of it. And the dollar is starting to break out today. So there's a massive dollar short position. I've been reading about it, and everybody's market consensus is a dollar short position. So there's the potential for a pretty nasty short squeeze in the dollar. If that happens, a rising dollar is going to hurt the stock market. It's going to bring the market indices, especially the really frothy areas, the high flying areas. They're going to sell off first. One thing I want to point out and is a lot of those high flying stock areas, tech and whatnot, is packed with retail traders. And by retail traders, I mean, for the most part, uninformed traders. I'm a retail trader. But traders they don't look at technical indicators, they don't look at the dollar, they don't look at volume. All they really look at is price action, and they react basically to that price action. So when things are going up, they're bullish and they buy, and when things are going down, they're bearish, they sell. That's kind of how that works. And so they're going to be the last to know what's going on. The market internals will start showing up, and then they'll start reacting and selling after the prices have started to drop substantially. Okay, so dollar. The point that I want to make is we'll look at this. All right, daily chart, we've got bullish divergence right there. Again, bullish, and this is also bullish divergence right here, the short-term bullish divergence right there, where the momentum's been moving up and the dollar has continued to drop, creating bullish divergence. You have a bullish falling wedge pattern right here, and the top end of the wedge on the dollar or on the daily chart, we're starting to get that breakout just now. You look at the hourly, and we broke out, kind of consolidated. Now we're starting to move. And if I flip over to the markets, you'll see that they're probably starting to sell off. I know the IWM is, you're starting to see that selling come in. So again, institutions are looking at the dollar. Let's just put it that way. Going back to the dollar though, starting to break out. If this holds and we can get a daily close on a breakout, I think the dollar is going to ramp up to about this 91, 92 area right here. That's going to put pressure on a market that has been rising because the dollar's been falling. So understand that. That's the setup that I see right now, starting to break out. I was talking about a breakout in the dollar. If I go to the hourly chart here, this is the point we broke here, and I said I don't think we're going to come back down to the lows. I think we're going to stop short and then break out. That's what's happened. All right, go back and watch the video a couple days ago, and you'll see this is what I was talking about. I thought we were going to get to about here and then go higher. Went a little bit lower, but again, we didn't make a new low. We stopped short and they started to buy. So there's your breakout in the dollar. Gold already caught onto it. So gold broke down already. And at the time gold looked bullish, but I kept saying that dollar looked bullish too. So I thought that could be bearish for gold, and sure enough, there it is. Longer term, I'm still bullish on gold. I still think longer term gold's a good deal. And the dollar's trying to break out. So let's look at the long bond. That's another thing that I'm keeping an eye on. So the TLT, the long bond, has been selling off. But again, the TLT selling off is telling me that inflation is coming. If you do your research, you'll notice that when the yield curve is steepening, which means the long end of the bond market, the 20 plus 30-year bonds are selling off and the yields are rising there, and then the short end of the curve, which is like the T-bills and the 1 year, the short end of the curve, the Fed's got that pinned at like 0. So you're getting a steepening of the yield curve, which allows banks to borrow short at cheap interest and lend long at higher interest. So that's good for the financials, and that's usually a signal that inflation is coming. The market's expecting inflation. However, gold doesn't sell off when inflation's coming, and that's what we're seeing here. Gold is the primary inflation hedge for the most part, and gold's selling off. So the long bond selling off and gold being sold off are conflicting information. I think it's likely that they're going to buy the long bond and the market's going to sell off, and the long bond is actually going to, this was kind of a washout move, and now the long bond is going to bottom out and we're going to rally from here. So that's something that to keep an eye on. Again, also you can see here on the hourly chart, we got bullish divergence right there. Prices kept falling. Momentum starts moving up. It's not on the daily. We don't have bullish divergence on the daily. It is just on the hourly there. Okay, let's look at the market indices and then we'll wrap there. I'm not going to go into any individual stocks today because I think the bigger trends here and the bigger kind of macro themes are really the most important thing. Everything should trade according to kind of the general themes. Nasdaq futures. All right, so here's their trend line right there. This is kind of the rally in the Nasdaq futures that's been going on. We got the sell signal. Looked good, especially right here. They made it look really good. This breakdown right there, that really looked like we were going to continue to the downside, but they snapped it back and then ramped it all the way up. Now we're at trend line resistance, which is this trend line that was support previously. Now it's resistance. Seems to be holding. You can see these wicks where they keep popping it up, but it keeps failing. And now we're starting to get rejected. So that's likely to be resistance. Okay, moving on, we'll look at the SPY futures. So SPY futures it doesn't have as clean of a chart. SPY is, the futures ramped all the way up to the upper end of this price channel. So here's the price channel that SPY futures has been in. Broke down, that was a whipsaw, broke out, maybe that's a whipsaw. As of right now, it's still a breakout. So we could hold here at support and then continue higher. It's undecided at this point, so I don't have much to say on that one. Here's the small cap futures. You can see here we had a breakdown and a sell signal right here. They did a ramp, they basically made it look pretty convincing right there, did a back test, overshot, and all the way up here. But now we're we're failing again, basically. Impulsively selling down. So we'll see where this ends the day. But as of right now, we're getting another breakdown. Let's look at the triple Qs, tech sector. Again, here's your uptrend line. From November, we were walking up this uptrend, broke down, so there's a sell signal. That's a kickback rally or back test. And this is the objective area where you usually want to be shorting at the closest to resistance that you can. And we got right there. Everything seemed very bullish. Obviously, huge ramp into that area, but this is resistance. This is likely where it's going to reject and start to sell off. You look at the daily chart here on Qs. We still have bearish divergence on the daily. It just keeps building. It's been building for September, so many months. And this is why the big sell-offs typically they build over months, and then when they come, they wipe out all the gains of all that time. So I could easily see a big sell-off all the way down to this 275 area, wiping out a lot of these gains, going all the way back to August, September area, and it will happen very quickly if it does happen. Let's look at the SPY. All right, SPY again. This area up here, and I'm going to highlight it a different color just so it really stands out. We'll make it blue. That's fine. So this blue line right here is you know, that is the trend line that I've been following for years now. And I started the channel when we broke this trend line. This is going back to 2009, your bull market, basically. So this is a nice organized bull market, just steady, consistent uptrend. Broke the bull market in 2018, and ever since then we've had massive swings to the up, and to the upside and the downside. Right now, obviously, we're having a huge swing up, but this could easily turn to a big swing down. And so this is when I started the channel. This is when I turned bearish. And so the entire life of the channel has been bearish in nature because we are below trendline support. I like to buy when we're in a bull trend. I like to sell or look at shorts when we've broken that trend at or near resistance. So again, we're zooming in. We're right up there near the trend line. I don't know if we'll get there. We'll either overshoot it or undercut it, which means we won't get there. We'll just stop short. And so again, negative divergence is intact. It remains. So we're going to continue to watch that and look for some sort of a rejection on the SPY. Zooming in on the hourly, we're just, we recovered this price channel. Looks like they kind of got up there. So we're still within that price channel. No sell signal on the SPY. Okay, small caps. Small caps, this is an hourly chart. We had a bearish rising wedge right there. Broke the wedge. That was your sell signal. Did a full back test. Pretty impulsive, sharp back test. They looked like they wanted to recover it, but now we're failing again and rejecting. So this is, to me, this looks like an objective area to short at, and that's what I'm doing. So again, with the dollar, if the dollar is going to continue to rise, I think it's likely the market's going to continue to sell off. Let's look at the daily here on the small caps. We do have negative divergence now on the small caps, and it's confirmed. Here's the RSI. See how we turned down right here? And right there, it's turned down at made that lower peak. So that's a confirmed negative divergence on the RSI. And we did that while making a new higher price. So negative divergence on the RSI or on the IWM small cap ETF, which I don't think we had up until right here. Previously, we didn't have it. I think I kept pointing that out. I didn't see anything bearish in small caps because we didn't have that negative divergence. We got it now. So to me, that looks like we're heading lower. Where do we go on this one? Well, if we fine tune it, well, we got a little range right here. So I think we probably come in gap fill 197.55. That would be the first kind of level where the dip buyers are going to show up at the very first opportunity of support. There's just a high probability that takes place because they've been pretty much pre-programmed to buy every dip. They look for support. The first level of support, they step in and buy. So expect a reaction on the first level of support on any kind of downdraft. It's just when that reaction fails and then the dip buyers get burned on it, they'll probably step in and buy the next dip because there will be a second round of dip buyers. Eventually, it's not going to work, and then when they realize that it's not working and they're taking a lot of losses, those dip buyers will start to panic sell because they won't be used to having big sell-offs, so they'll panic sell. And I think that's why in the last few years, we've seen when there's big sell-offs, it's just like straight down because everybody's just think stocks go up forever. I think a lot of investors today have only been investing since 2009. They've only experienced a bull market, so they don't, they think it's never going to end. That's just recency bias. I think that's just kind of human nature there. So IWM looks bearish at this moment in time. We're breaking down negative divergence. I think we go lower. Okay, guys, that's all I got. I'm going to get the video out. Markets are breaking down now, so I want to make sure you guys are seeing what's going on. Catch you guys on the